Microsoft Corp, ticker symbol MSFT, is currently trading at $438.73 a share. If we look at the stock year to date, you can see it is up almost 4%. It had some downtimes with the tariffs and all of the other, I'll say, Trump stuff, but has had a recent increase of about 23% off some strong earnings. Am I going to be going through those right now? This is the full year 23 quarter 3 earnings. And then we'll be looking at my automated stock valuation spreadsheet to see if it's a buy or sell based on these most recent earnings using the discounted free cash flow model, comparable company model, dividend discount model, and Ben Graham formula for intrinsic value. So I'll just put in the ticker MSFT, and there's a load of all the latest company financial data so we can have a deeper look, but we will be going through the actual earnings here. So this was on the 30th of April, and we can see revenue, 70 billion, increased 13%. Operating income, 32 billion, up 16. Net income, 25.8 billion, up 18%. And diluted earnings per share was $3.46, up 18%. Some notes here. Cloud and AI are essential inputs for every business to expand output, reduce costs, and accelerate growth, said the CEO. From AI infra and platform apps, we are innovating across the stack, deliver for our customers. We deliver a strong quarter of cloud, yada, yada, yada. So everything is looking up, but if we have a look at the actual numbers here, I'll just scroll down a little bit more. We have the income statement here. This is the 3 months ended of 24 versus 25, and then we have the 9 months ended 24 versus 25. So initially product, we'll break these numbers down more. 17.8 down to 15.3, and if we look at the 9 months, a similar story, 51.5 down to 46.8. But service is another 44.7 to 54.7, and on the 9 months, 128.8 up to 158.4. Overall total revenue is up 61 to 70 and 180 to 105. If we scroll down a little bit more here, we can see the actual segments. And just before we go there, actually, we'll go back to my sheet. If I can click through my pages here. So market cap 303.3 trillion, PE 34, which is a little bit higher than the market average, which is 27. Earnings per share $12.49. Beta of 0.99, meaning is equally volatile as the market, although, well, slightly less. Target price, analysts have it as a buy, $505 a share. They do pay a dividend, 0.76%, meaning you'll get paid $3.33. Is it a safe dividend? Yes, it is. 24 billion in terms of the net income, 25% in terms of the free cash flow. It's 35, and buy before the 15th of this month, in a couple of days, and you get paid your dividend. So we have the numbers here. Let's go to revenue. This is yearly, and we have the trailing 12 months. So all-time highs, 270 billion. Steady increase all the time with Microsoft since as long as here, but definitely since the last few years. Everything is up. So now we can go back to here, and we can have a little look. So this is split between the 3 segments: productivity and business processes, intelligent cloud, and more personal computing. Let me just see here. Productivity and business. This is the products and services of the productivity, communication, information services, 365, Copilot, the consumer subscription, Office, and then LinkedIn, and then Dynamics 365. So that's productivity and business. Intelligent cloud, things like Azure and the other cloud services, GitHub, and then more personal computing, the hardware, the gaming, things like that. So let's just have a look at the numbers here. Largest segment still, well, this is 9 months and 3 months, so we'll just quickly go through them. Largest segment, productivity and business processes, 27 up to 29, and then 78 to 87. So still the largest segment, but intelligent cloud is closing in ever so, well, I say ever so slowly, but pretty quickly. 22 to 26, 63 to 76. So this is increasing at a faster rate. Soon we'll see this as the largest segment, but currently it's still productivity and business processing. More personal computing up as well, 38 to 41, or 12.6 to 31. Overall, we have 61 to 70 and 180 to 205. Operating income as well, big jumps. Everything is up. Everything is going well. So if we go back to my sheet, as you said, revenue at all-time high. Net income, similar story, 96.64. Free cash flow, not all-time highs, 70 billion. And if we look at operating cash flow versus CapEx, CapEx is up. Operating cash flow is up, therefore free cash flow is down. But big capex spend at Microsoft, they drop that, free cash flow will be higher. Shares outstanding, they've historically bought back, continue to do so, rewarding shareholders. So let's have a look at the discounted free cash flow model. This way, buying stocks, looking at their future free cash flows, discount them days value, and let's see what it gives us. $300 a share. You can see here, free cash flow ratio, an average free cash flow is about 50, which is quite high, but let's see if we agree with those numbers. So we're expecting just shy of 300 and 320 billion in the coming years. Do analysts agree with that? Oh, has Yahoo Finance changed their website? No, they have not. We're a little bit more bullish, but I think we'll keep that as it is. Net income margins, I'm pretty happy with that. I think we wanted, so the trailing 12-month cash flow, this is a bit lower. I think we can increase this probably to about 87%, but still not a buy. $310 a share on the discount free cash flow model. Dividend discount model, let's see what this says. They have pretty consistent growth of about 10%. So, but the weighted average cost of capital is there. So we'll just increase this to 8. Yeah. So if it's 8%, which is lower, it says it's $700 a share. But all this is saying to me is they're increasing it 10%, so it is a buy. Dividend discount model, I don't really like it for exact numbers, but you can see here it is saying that it's a buy because if they increase it 8% and they're doing a 10%, it's $700 a share. But I wouldn't take too much in the intrinsic value here. I would just see that it is a buy if they continue to do it. So that's good to see. Ben Graham formula for intrinsic value. He doesn't like stocks at the minute due to the high interest rate environment. 12.4% growth, and the AAA bond yield is currently higher, 5.45. So he's going to hate this even more. $220 a share. So discount free cash flow model doesn't say it's a buy. Dividend discount model says it's a buy. Ben Graham says no. So finally, we have a look at the comparable company model. This is a way of valuing against its competitors. You can see here we do have some. We'll do a few comparisons. I think initially we'll compare against Apple, Amazon, and Google, which maybe Meta as well. There's so many to do with Microsoft. So we will do AAPL and we'll do Google. So this will load up all the latest company financial data for these, and then we can have a compare. We're looking at growth rates of revenue, EBITDA, net income, profit margins, price to sales, price to book PEG, and then specific metrics are EV to revenue, EV to EBITDA, PE, and forward PE. So enterprise value, Microsoft's the largest. Revenue, actually the lowest. Middle of the pack growth rate towards the upper side. Apple, lowest, quite interesting. 1 year revenue growth rate, it is the highest. EBITDA, highest. Net income, joint with Apple. Google is actually higher. Profit margins, highest margins. Price to sales, it's the highest. Price to book, it's middle of the pack. And PEG, which is Peter Lynch's price earnings growth, is actually the highest. EV to revenue, it is the highest. EV to EBITDA is the second highest. PE highest, and forward PE is highest. So I don't think this is going to be a buy. And as you can see here, prices ranging from anywhere between, ignore the green there, 240 to 360, giving it an average of 320. So not a buy according to the comparable company model. That is quite interesting. Now if we were to compare against, we'll put Nvidia in there and Amazon. Well, we already have Amazon. Let's go Nvidia, because they are the 4 largest companies in the US at the minute. You can see here with Nvidia's multiples, it would still not be a buy, but a lot closer, $430 a share. This is because of Nvidia's high EV to revenue, high EV to EBITDA, high PE, and everything else. So overall, according to models, it does not look a buy based on these numbers. But I've always liked Microsoft. I think it's a great stock and a great pick, and historically has always beat the market over the last 5 years, but recently has had a bit of a drop off. So this could be the good opportunity. Right, guys, thanks for watching. Please give a like on the video if you enjoy it. Subscribe if you're not already. Check my Patreon. Links are in the description. I'll catch you guys next time.